Right now, as you watch this video, your neighborhood bank is quietly making money off of you and giving you absolutely nothing in return. If you have your emergency fund or hard-earned savings sitting in a standard savings account at a traditional megabank, you aren't just letting your money sit idle, you are actively losing money to inflation every single day. Most people think keeping money in a savings account means it's working for them. But traditional banks are paying an average interest rate so low, it's almost insulting. Welcome back to Finance Fluent, where we translate complex money into plain English. Today we are breaking down a simple, completely safe account swap that will instantly multiply the interest you earn on your savings by 10 times or more. Let's unlock the power of high-yield savings accounts. An HYSA stands for High Yield Savings Account. At its core, it operates exactly like the standard savings account you already have. You can deposit money, withdraw money, link it to your checking account, and view your balance on an app. The structural difference comes down to one critical number, the APY, or annual percentage yield. While a standard account pays you pennies, an HYSA utilizes a much higher interest rate to aggressively grow your cash. It is the ultimate tool for storing your short-term goals, like a wedding fund, a down payment on a house, or that emergency fund we built in Video 1. Let's look at the actual math, because numbers don't lie. The average traditional brick-and-mortar bank pays an interest rate of around 0.01%. If you leave $10,000 in that account for an entire year, do you know how much the bank rewards you? $1 single. They buy you a single piece of chewing gum for holding your life savings. Now, take that exact same $10,000 and move it into a high-yield savings account, paying a conservative 4.5%. In that exact same year, without lifting a finger or taking a single investment risk, your account generates $450. That is a free car payment, a flight, or a massive boost to your emergency fund, paid to you purely for picking a better vault. When people hear these numbers, they immediately get suspicious. They ask, what's the catch? Why are these banks being so generous? The answer is simple: efficiency. Most high-yield savings accounts are offered by online-only banks. Because they don't have to pay for thousands of physical brick-and-mortar buildings, electricity bills, or physical security guards, their overhead costs are incredibly low. They take those massive corporate savings and pass them directly to you in the form of a higher interest rate to win your business. The next question is always about safety. Is your money protected if an online bank goes out of business? The answer is yes, as long as you look for 4 specific letters: FDIC. The Federal Deposit Insurance Corporation is an independent agency of the government. When a bank is FDIC insured, the government guarantees that your deposits are backed up to $250,000 per account type. If the online bank completely vanishes tomorrow, the government cuts you a check for your balance. It is exactly as safe as the biggest bank on Wall Street. Opening an account takes less than 10 minutes online, but don't just click the first advertisement you see. Look for 3 specific ground rules. First, 0 monthly fees. A true high-yield account shouldn't charge you a maintenance fee just for existing. Second, no minimum balance requirements, meaning you can start earning high interest whether you have $10 or $10,000. And third, easy transfers, ensuring you can move your money back to your primary checking account within 1 to 2 business days if an emergency hits. Stop letting your local bank profit off your laziness. Take control, swap your account, and make your cash work for you. If you want a curated list of our top-rated, fee-free, high-yield savings accounts right now, check out the links pinned in the description below. And if you want to know what to do once your savings are maxed out and you're ready to actually start investing in the stock market, hit that subscribe button, because that is exactly where we are going in our next video. Remember, I'm here to help you become finance fluent, not a licensed financial advisor, so always verify your options. Drop a comment below. What interest rate is your current bank paying you? Thanks for watching, and see you in the next one.